Are you ready to turn two of the most exciting growth stocks, HIMS and Palantir, into monthly income while protecting yourself from any potential short-term downturn in the market? We're going to kick this off with a deep dive into Palantir and HIMS earnings and talk about exactly why these two stocks are poised for growth going forward through the rest of 2025 and how we can use the poor man's covered call and leverage utilizing options to profit in both directions on any short-term pullbacks as the stocks rocket up. Be sure and watch all the video because we're going to talk about how to manage these positions as well. Remember to hit like and subscribe down below. Download the free options workshop in the link below. It talks about the main benefits of trading options over just buying stocks outright. Disclaimer, I'm not a financial planner. I'm not recommending trades. Do your own research. It's your money. You're the one taking the risk, so you've got to do the ultimate risk. Both Palantir and HIMS are compelling stocks for 2025 and really the next decade going forward. Palantir is riding a surge in demand for its AI, artificial intelligence software, and just raised its 2025 revenue forecast to $3.9 billion. That's a 36% jump from last year despite recent volatility and sky-high investor expectations. HIMS and HERS continues to disrupt the healthcare space with rapid revenue growth and expanding product offerings, making both companies standouts for investors looking for innovation and long-term upside. To capitalize on these opportunities, we're going to utilize the poor man's covered call in order to be capital efficient and collect that monthly income. Palantir just reported strong Q1 results with revenue rising 39% year over year to $884 million, surpassing analyst expectations. The company raised its full-year revenue guidance to $3.9 billion, reflecting over 31% growth. This is driven by a surge in demand for its AI-powered software, especially in the U.S. commercial sector, where revenue jumped 71%. Palantir's inclusion in the S&P 500 and NASDAQ 100 highlights institutional investment. Key risks remain, including Palantir's high valuation multiples trading at over 200 times projected earnings, potential tariff impacts, and uncertainty around government spending cuts. CEO Alex Karp described the company's growth as unparalleled, emphasizing its transformative role in AI and data analytics. HIMS and HERS reported an impressive Q1 earnings, with revenues soaring 111% year over year. The company achieved strong subscriber growth and secured strategic partnerships, including a notable deal with Novo Nordisk, enhancing its healthcare platform. Despite missing EPS estimates, HIMS posted a strong EBITDA beat and raised guidance, signaling confidence in sustained growth. The market reacted positively, reflecting optimism about HIMS' innovative approach to personalized healthcare and expanding market footprint. Both of these companies are poised for long-term growth going forward with solid earnings momentum, and they're in sectors, personal healthcare and commercial defense AI software, that are poised for explosive growth over the next decade and beyond. In 2025, Palantir projects over 31% revenue growth driven by a booming U.S. commercial segment expected to grow 68% to $1.18 billion. The company's AI-powered software is increasingly adopted across industries from commercial enterprise to government and defense, fueling robust demand. Despite some controversy over government contracts, Palantir's technology remains critical for military, law enforcement, and supply chain applications. Analysts remain optimistic, with Palantir raising its full-year revenue forecast to nearly $3.9 billion and projecting strong operating income and free cash flow through 2025. HIMS and HERS is rapidly expanding its personalized healthcare platform, disrupting traditional healthcare with a consumer-driven, subscription-based model. The company reported an impressive 111% revenue increase in Q1 of this year, fueled by growth in weight loss treatments and new product launches in areas like low testosterone and menopause support. Strategic partnerships, including a pivotal collaboration with Novo Nordisk are broadening access to branded medications and strengthening its ecosystem. Hims & Hers is leveraging proprietary data and telehealth innovations to scale personalized medicine, aiming for $6.5 billion in revenue and $1.3 billion in adjusted EBITDA by 2030. Why is the poor man's covered call the ideal strategy for these stocks right now for cash flow and long-term growth? Well, let's break it down. Capital efficiency. Instead of buying 100 shares outright, which requires a large upfront investment, the poor man's covered call lets you control 100 shares with much less capital. And the monthly premium income. By selling the short-term out of the money call, you can collect consistent premium monthly. And downside risk mitigation, because if you don't own the stock directly, your max loss is limited to the cost of the long leaps option minus the premium collected for the short-term call. And it fits the macroeconomic expectations. With interest rates expected to be cut and tariffs potentially easing soon, the poor man's covered call positions you to benefit from a likely market uptrend while generating income in the meantime or the short term. And it's recession proof, or it provides protection at least against a possible recession. And there's flexibility. The strategy lowers your capital requirement and its defined risk, and it allows you to protect your portfolio during downturns and maintain flexibility to go ahead and add more positions or double down if there is a recession, and it creates a buying opportunity going forward. All right, guys, let's break down and show you exactly how these trades are done on the option trading platform. Okay, guys, this is the Tasty Trade option trading platform. There's a link down below. It's extremely intuitive. It's the option trading platform that I use probably the most and like the best. So check that out. We're going to punch in PLTR right here in the upper left, and we're going to bring up the option chain while on the trade page. We're going to go out 318 days. I like to go about a year, so we can go 408 days or 318, but I'm going to go to the March. We're going to open that up. Calls are on the left, puts are on the right. We're going to buy the deep in the money call option. I like the 100 right here. It's the 67 delta, so that gives us a good replication of owning the 100 shares of stock, basically 67% replication. We're going to punch on the ask or the buy right here on the right. And you see the mid price is $30.80. So that's controls 100 shares of stock. So that's $3,080. Now, if we were to buy 100 shares at a 107 price right now, it would cost $10,717 right now. The market is open, so it's changing. Now, if we go to the curve mode and analysis, we can see that as the stock price increases, we profit just like owning the 100 shares of stock. So if we get up to 160, which we definitely could, no problem, our P&L at expiration would be $2,915. You can see right up here. $2,950 at a price of 160.29. So it tells you what it would be basically, and it's an estimate. But you can see we're basically making our money back if it gets up to 160, and it easily could when these tariffs get resolved. And at some point it will. It's just a matter of when. Now, what I like to do, we'll click on the mid price right here, and then we'll go back to the table mode. We'll close this up while leaving this 100 call option on, and then we're going to sell the short term. We're going to sell the 45 call against it. Now we can go out. I like to go to the 125 right here. It's the 28 delta, so that would give us a 72%. You subtract it from 1 probability of profit on the call option, but we collect $3.70, so that's $370 that we collect, and we can collect this monthly, and that allows us a lot of upside too, from the 107 all the way up to the 125. So what's that? $18 of upside on the leaps that we can make, and still we're going to collect $370 automatically when we place this trade. Now, $30.95, watch this come down by $3.70 now. So it's 27.40 to place this trade. So we hit review and send and place the trade. Now we're going to place the same trade in HIMS. So we can go out 318 days to March, open that up. I like the 40 right here. We can do the 40, which is a 72 delta. Mid price is $18.05, so $1,800 versus $4,500 if you bought 100 shares outright. You can see that same analysis as the stock price goes up. We make money just like owning the 100 shares. Go back to the table mode, close this up. Let's go to the June. And these stocks, both HIMS and Palantir, have juicy premiums. So the monthly premium that you can collect is huge. At 50, we could collect $475. You do that 3 times and you pay, 4 times and you pay the cost of controlling the 100 shares. So you can do that in less than 6 months. But I like we can do the 55 or the 60. I'm going to do the 55 for $350. And you can see the price of that now comes down to $14.40. We hit review and send and place the trade. Now, how do we manage these trades? It's pretty simple. It's not rocket science. Now, the long-term option, we're buying close to a year out. Once it gets down to that 9-month range, then I look to close that leaps and roll out again to a year or more. We don't want the time decay to hurt us as we get closer to expiration. Even as far as 6 months, you could let it run. There's still the most of the time decay really hits you in the last 90 days. Now, if there's a downturn and a pullback in the market, I'll keep my small leaps position on. I'll close my short calls for that profit, and then on any big up day, I'll throw on a call against it. Now, also at that bottom turn in the market, if a recession does hit, then I'll buy another leaps option. And I won't just buy the leaps. I'll buy the poor man's covered call and sell the short call against it and collect monthly income as the stock prices move up. All right, guys, be sure and hit like and subscribe down below. Download the free options workshop in the link below. Leave a comment, ask a question. I answer every one. Thanks for watching. I'll see you in the next video.